Good evening, everyone. It's Tuesday, January 28th. This is Lee McMahon with your daily video. Let's take a moment to look over the risk disclaimer. It should be on your screen, and then we will move to the charts. All right, we begin today with the U.S. dollar Turkish Lira. Somewhat unusual choice, or an uncommon choice, but one that needs to be talked about today due to the actions taken by the Turkish Central Bank tonight, or earlier tonight, and in an effort to deal with the drastically weakening lira. So the lira has lost about 14% of its value since basically through December and then January, and it hit a record low up here at 2.388. That is causing problems for Turkey, and it is sort of symbolic of this emerging markets turmoil that has been the highlight of pundits and talk shows of late. There is some concern with Ukraine, South Africa, Brazil, Indonesia, Turkey, etc., where currencies, risk FX or emerging markets FX, have suffered greatly, especially against the dollar and the yen, as people are fleeing these sort of risky currencies and seeking safe havens, which is causing some problems for these countries. So the Turkish Central Bank stepped in today to try and make a difference on that, and they used the bluntest tool in their toolbox, and they hit the problem as hard as they possibly could, and it seems to have some sort of an effect. USD TRY is down over 3% so far this trading session, 3.4%, which is a monster move in currency terms. And what did they do? They hiked the short-term interest rate from 7.5% to over 12%. All right, so a huge 300-point increase. Driving the lira higher, so helping sort of preserve some of their import costs and stuff like that, and also I think reassuring markets a little bit that this emerging markets panic is can be dealt with. You can see a little bit of so E-minis have pushed higher, the Nikkei has pushed higher. The Dow, all right, you can see risk across the board pushing a little bit higher. That sent yen pairs higher as well. All right, Aussie yen back into its resistance zone at that 618% fib. Kiwi yen, okay, pushing up into its resistance zone as well. So busy night. Turkey, sort of the savior of emerging markets for right now. We'll see how long this lasts. I'm not wholly convinced that a 5% increase in interest rates by the Turkish Central Bank is going to be a panacea for the problems that we have going on in emerging markets and how they have sort of spread to the more bigger American, European, Asian markets. The Nikkei, all right, that's still a head and shoulders breakdown. 15.5 is now big resistance. 14.75 is now big support. Basically play those levels. A break below 14.750 opens up a lot of downside. All right, so that's a big one to keep an eye on. Tomorrow we have the Fed, the FOMC rate decision, the last one chaired by Bernanke. So his last hurrah. I don't know whether or not they'll be serving cake at the press conference, but I kind of hope they are. I just think that would be funny if they rolled one down the aisle with all sorts of candles and everyone said goodbye. I doubt they will. They take themselves too seriously for that. But it's the last one by Bernanke. The market expectation very firmly weighted that we're going to see a continuation of the taper, another 10 billion. To be perfectly honest, that's probably correct, but I don't see where the conviction is coming from. Would not surprise me in the least to see them hold off and say, the data we've seen since the first taper hasn't been particularly great, so we're going to sit on it. If that's what we see, all right, we should then theoretically see the dollar weaken fairly dramatically. If that is the case, euro-dollar should be the one you're watching. Euro-dollar was the chart of the day today. All right, it's flagging very nicely here. Nice little bull flag here off of this rally, back on the 22nd. Major resistance really doesn't come in until about 138.50, 138, these previous highs, this area. So some pretty decent upside here on euro-dollar. Downside well capped by about... First, these moving average cluster at 136.43, then the trend line retest at about 135.90, and then the major trend line about 135.50. So lots of support on euro, less resistance, so that one certainly seems biased to the upside. Aussie dollar has picked up a bit here as risk, okay? Increase. There are a couple ways to draw Aussie. This is how I have it drawn now. So the major resistance is about 88.36. The alternative, however, has us already in a long trade here on the site with this picture perfect retest. All right. So we're at break even. We'll see exactly how it goes as we encounter resistance. If we continue to push through, there is some room here to the upside. So keep an eye out on that. Let's zoom out a little bit. Take a look here. Major resistance. All right. Let's assume that we continue to push higher. The overall bearish trend, all right, that's dated back, all right, not the overall bearish trend, but this immediate term bearish trend that dates back to October, that's broken on a move above 89, all right? If we manage to move and close above 89, that does break the shorter term downtrend. We could start to see some acceleration from there. All right, we still have to go back, all right, quite a ways. All right, we need to get above 92 to break the longer-term downtrend, but that first descending trend line at about 89, all right, that could be a fairly interesting trade if we break that higher. Euro-Aussie right now looks pretty constructive to me, all right? Like I said, Euro-Dollar looks good. Aussie Dollar also looks good, so we'll see exactly how that plays out. But certainly if we see some risk off coming into the FOMC and going out of the FOMC, this flag on Euro Aussie looks very primed to break here. About 155.80 or so. A little bit lower depending on exactly when we get out of it. But a very clean flag here, all right? So that's definitely one that's worth keeping your eye on going forward as well. If I pull up the fib levels, all right, we came pretty close to testing that 618% fib. So we'll see if that holds and if that launches it higher. Like I said, the euro looks good. Pound dollar right now, lower high. It's kind of a tough situation right here on pound dollar. I've had to stay away from this one for a while. It hasn't really thrown out anything overly clear. You can play that short-term breakout if you want, but I will probably just continue to ignore pound dollar for a little bit longer. Dollar CAD, potential double top possibility. We really need to see 110.42 or so fail. Below there, we may see some acceleration down to the downside, but I'm not super interested or excited about that possibility. You can see there is a 50% fib that we are approaching. Give me 1 second. I'll pull up the longer term. It's 10-year chart. All right. All right, that's the 50% fib that we're coming close to. This is the 2009 highs. All right, to the basically 2011 lows. So a relatively significant fib here at 112. So we could see that sort of cap price for a little bit, maybe get a little bit of a retracement. Any real dips, I think, are buying opportunities on the CAD, but we do really need a dip to sort of reset that one. We ran through the indexes. Gold, all right, we broke back within this triangle. Not a huge concern to gold bulls, I think. As long as 1240 holds, we're in good shape. 1240 support, 1280 resistance. I haven't looked at crude in a while. Still nothing on crude. The trade was buy here on this perfect retest. If you didn't do that, I don't think there's anything worth trading here on crude. Kiwi dollar, stuck in this range still. Still no interest in trading it. If you're desperate to take a Kiwi trade, you could try to trade this breakout, but I don't like it at all. I would rather still not trade Kiwi. I think it's unclear. I think there's a lot better opportunities out there. So that's really what I have for you tonight. Keep an eye here on the Turkish Lira. Keep your eye on the Nikkei, okay? And risk in general going into FOMC, and we'll see exactly what the Fed has for us tomorrow. All right, good luck trading, and I will definitely be talking to you tomorrow.